If silver's going to 333, it's going through 60 on the way, isn't it? And I'm talking about strikes at $80 and $85. So that doesn't mean it's going to happen by February, and I'm not got the expiry date when in February. And it was showing that actually people who think this is new, that the gold and the silver has been moving east from the west. This cycle and these events have been planned for a very, very long time.
And this will tell us where gold should move to over the next little bit. And that is about $4,685 up to about $5,100, $5,200. That's the next upside target. The one that gives us that 68 target is the daily chart. We really have to zoom into the short-term charts to get an idea of where silver could move. So if we were to just look at this recent pop in silver and this tight little pause, it's pointing right up into this 68, 69 level, which is about that 17, 18% move.
Francis Hunt and Chris Vermeulen highlight why silver's current breakout structure is signaling an explosive move ahead. They note that if the market is ultimately headed toward dramatic long-term targets, such as the well-known $333 technical projection, then clearing the $60 zone is simply a stepping stone on that journey. Options activity at strikes between $80 and $85 reinforces the idea that sophisticated traders are positioning early, even if the timing isn't tied to any specific February expiry. On the gold side, the next upside band sits between $4,685 and $5,200, driven by multi-timeframe momentum and a pattern that has been developing for years. Zooming in on silver's recent surge reveals a tight consolidation pattern pointing toward the $68 to $69 range, an immediate 17 to 18% window that aligns perfectly with its bullish structure. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
You're going to get surges. There's going to be more surges. Is there any reason specifically today more so than any other day? I don't particularly see something, but people like to do what I call toe tagging, and they'll jump on so-and-so said something, and that's the reason why silver's gone. If silver's going to 333, it's going through 60 on the way, isn't it? And it's part and parcel. Interesting little tidbits to really get the silver guys a little bit motivated and pumped, because a lot of my messages sound very doomer, because I really just want to talk truth on this channel, hard, cold truth, even if it upsets people. But the one shining light is truth is this block of 100 ounces here, and price discovery is happening. And this makes me smile. And I've got more news for you on that. One thing I've been seeing, and this is coming off the newsreels a little bit, so I'm reporting secondhand, but there's actually been an outlier number of engagements in deep out of the money call activity for this February 2026. And I'm talking about strikes at $80 and $85. So that doesn't mean it's going to happen by February. And I'm not got the expiry date when in February that is, but you could have the possibility holds that it could be, or certain people think that there's a risk of that sufficiently enough to want to hedge against that. So if you were a bank that maybe were structurally short silver in some way, you might hedge by doing that, by buying calls, or you just have speculators with real strong feel. Remember, these people have bought puts. Now, they would have been probably bought in the 50s that are expiring not far off. Basically, the year's done, aren't we? It's Christmas season right now, not many shoplifting days left. And then it's January and a little smidge of Feb. And some people are buying calls thinking, you know what? I either want that lottery ticket or I want to hedge against a position that's going to hurt me real bad if this thing gets disorderly. So that points to some information that there's extra normal volume there as well.
And it's interesting, it's occurring in the wintertime, like you alluded to. Traditionally, seasonally, the wintertime is usually a dull time for the precious metals trade, is it not?
There are annual seasonalities, and all of those go for a ball when you're in fiat debt debasement, convexity downside phase. And this is where we truly are. This is why these things are moving. First, why gold moved. Second, why silver. But silver has the additional aspect to it that I think they've run out of runway in terms of the above ground storage available for industrial use. And it's gone also that China has been accumulating gold aggressively, and in the more recent years has pivoted to getting its citizens to stack silver. So the price of gold is prohibitive for most everyday Chinese. They've been, stacking silver. And you and I both know Eric. He's been sharing a couple of pictures of the guys down at the commodity exchange, tiny little Chinese ladies sitting on trolleys with, the 16 kilo slabs, 7 deep and 10 across, and these guys are saying, here's how I say it. So with that kind of taking the physical out of the system that's gone on, probably driven out of the East, we are now getting true price discovery. And I want to add an extra point on this. Someone reshared the chart since the 70s. I might be able to even find it. And it was showing that actually people who think this is new, that the gold and the silver has been moving east from the West. This cycle and these events have been planned for a very, very long time. The two charts, if you only bought the open of the US session and closed at the late versus buying at the Asian session, are diametrically opposed. In fact, I think if you had bought the US session only, you would have silver at 15 cents, and you would have on the Asian session silver at $330.
The shift now unfolding beneath the silver market, noting that sharp surges are no longer anomalies, but signals of a bigger structural change. The heavy out-of-the-money call activity, strikes at $80 and $85 for early 2026, suggests that both hedgers and high-conviction traders see real risk of a disorderly upside move. This sits alongside tightening physical availability, shrinking above-ground inventories, and a long-running eastward migration of gold and silver that has now accelerated. With China encouraging citizens to accumulate silver and withdrawing metal from global circulation, true price discovery is beginning to show itself. Even seasonal patterns are breaking as the market reacts to debt-driven fiat pressure and structural scarcity forming in real time. Let's get into the interview.
Yeah, there's a lot going on with gold. It's pretty exciting, and I can share my charts on that. Let me pull it up because there's some interesting waves unfolding in the gold space here. So let me just pull up the chart. So it's been a pretty epic year for anybody in precious metals. It's been pretty good since really 2019. We've been seeing gold move higher for years. It really has been sprinting up this year. There's still a lot of upside potential, I think, in both gold and silver. And, if we were to just kind of zoom back, I'll actually flip to the weekly chart because it gives us a nice view. So if we take a look at gold, all of these moves. So gold's been making a series of 20% moves over and over again. It makes a bull flag, it pauses, it makes these, repeated 20% moves and goes into these pauses. And of course, we're back into another 20+% move. It's been stair-stepping its way higher. I've been talking about gold for years, watching all of these unfold. Every time one of these new steps are formed, it allows us to project forward where the next step should be based on technical analysis. Using Fibonacci extension gives us a very accurate tool. And so gold's just been working its way higher. Now, sometimes it takes months and months to digest a move. Other times it only takes a few months and then it starts to head up again. But when we take a look and zoom in on gold's current chart right here, we can use Fibonacci to get an idea of where the next major upside move is. And it tells us based on the lowest low from the previous flag to the high. And then we come down to this recent pullback. And this will tell us where gold should move to over the next little bit. And that is about $4,685 up to about $5,200. That's the next upside target. And surprising enough, where gold is, if you draw back up, it's another 20+% move. So gold is just in this limbo mode, waiting for a breakout. And silver, I'll touch on shortly here, but silver's already started that breakout. It's starting that move. And so it's really exciting. Gold has been a big, slow grind higher for years, but it's a rock solid investment. And the trends on all time frames are still pointing to higher pricing. The daily chart is pointing to higher pricing, the weekly, the monthly chart, quarterly charts, everything. So it's really exciting to be in the precious metal space. I hold physical metals. That's my main way of trading the precious metal space, and really just got to ride this trend. And I mean, we're in a perfect environment for gold and all precious metals to shine, to really do well, because people just don't trust systems. They don't trust the governments. They don't trust currencies. We got wars going on. I mean, there's just so much stuff. I mean, every year is a better story for precious metals to go higher. And I feel like we're getting to this major tipping point now. You know, we got central banks loading up on physical gold and silver. That is not a good sign. It's a good sign for higher gold, but it's not a good sign for the economy, the government systems, because something's going to break. And that's what gold has been warning us a long time. When gold outperforms the stock market or keeps up and moves up with it, there's something big and bad brewing that is going to eventually hit the market. And we don't know what it is until it actually happens, but it is a huge warning sign. And precious metals are one of those assets that do well during this uncertainty and worry phase in the markets. Yeah, silver's obviously at all-time highs. It's already broken out. I'm going to drop back to the daily chart just because it gives us a nice view of the shorter-term price charts. Obviously, we've had this pause, this kind of multi-month pause here, and now it's broken out. It's got this high momentum bull flag pattern, which is pointing to about $68 an ounce. And that could literally happen like in 3 or 4 days. This is if this pattern does pop and break to the upside, silver is going to have another explosive move, and it's a pretty significant gain. I mean, to get up to about 38, that'll be about a 17% move that could happen. In as we can see for silver, it happened really only in a few bars here last time. So there's a lot of explosive move built into silver. It's a very tiny market. And now that everybody has kind of got their eye on precious metals, people naturally look for what's the fastest moving thing so I can make the most money. And so silver is one of those. It's such a tiny market that when a lot of people focus and look at it and they dump money in at the same time, it moves fast. And so that's the benefit of silver, is if you can catch these moves, they're very explosive. So silver's got a lot of upside potential based on the charts. If we go and look at the weekly chart in the bigger picture, it's a little bit messier, harder to pick a target for it. I like to kind of follow gold for these targets. It kind of made a running correction to the upside. If we were to grab the Fibonacci levels based on a few of these patterns, we could say, well, based on this run up and this pullback, it almost doesn't matter which pattern I've grabbed. We've blown past those. We're at all-time highs. And we can zoom into a chart and just grab this most recent low, this rally up and this pullback. And that tells us kind of where the next short-term target is, which is about 63. The one that gives us that 68 target is the daily chart. We really have to zoom into the short-term charts to get an idea of where silver could move. So if we were to just look at this recent pop in silver and this tight little pause, it's pointing right up into this 68, 69 level, which is about that 17, 18% move. So silver is not nearly as clean as gold. It never really has been. It's a much noisier chart, lots more volatility. It constantly makes some higher highs and then lower lows, and it's a really great way to chop you up and get you confused and stressed out. So I always like to look at gold as the barometer, as the tide of precious metals going up with gold, and then you really just kind of invest in silver along with it, because they're kind of the same trade. It's just one's a little harder to read. So just use the big brother or the big sister gold as the dominant trend at play.
The current structure forming across gold and silver highlights how both markets have entered another powerful expansion phase. Gold continues its steady staircase of 20% waves, each pause building the foundation for the next leg higher. Fibonacci projections now cluster around the $4,685 to $5,200 region, suggesting the metal is preparing for another significant advance as long-term momentum remains firmly intact. Silver, meanwhile, has already surged into a fresh breakout, displaying the classic high-energy bull flag that often precedes rapid upside extensions, with multiple impulsive bursts appearing on the short-term charts and the metal sitting at all-time highs. The setup points toward a potential run towards $68 to $69 if momentum ignites. As uncertainty grows and liquidity stresses deepen globally, these price structures reinforce the broader trend already underway. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.